Hi, everyone. My name is Ben. I'm one of the co founders of Meteora. So, we've got a lot of new folks coming in, and I thought it would be really good to do one big intro to Meteora and how you can get started. So, Meteora is a DEX, and it's one of the top DEXs in Solana, and we've built some really unique dynamic liquidity primitives to offer really powerful ways for you to earn yield and fees from your liquidity. One of our main AMM techs is our dynamic pools. So if you go to the pools tab, you can see a range of dynamic and actually multi-token pools that you can LP in. And this is great if you're a sort of if you're new to being an LP, or you don't want to be that active in managing your liquidity provisioning. And if you're new, I think one of the best places to start is in our USDC USDT pool. We've currently got almost 5.7 million in here. This is a great way to just sort of get started. You don't have to deal with impermanent loss or divergent loss. Um, Basically, this pool earns from both uh, trading fees and lending yield. So something you have to know about our dynamic pools is that the idle capital is also sent out to lending protocols to earn lending yield. And while there is some extra risk in that, we do actively manage that risk on a minute by minute basis. And this system has been battle tested for the last several years. So another thing to note is that your liquidity provider fee, this is the fee that is charged on the swaps in this pool, and that um, basically is how much it determines how much fee revenue that this pool captures. There's a protocol fee, which currently is at 0% right now, and the AMP controls sort of the concentration of this stable pool. So one thing to know about the virtual price is the virtual price represents the price or the value of the LP tokens you get when you deposit. And basically, there is no denomination. What that means is like if your virtual price is 1, that means that the value of this pool 100% comes from the deposits. That means nobody has made any money. All the money in this pool comes from everyone's deposits, and there's been no profits. When the virtual price is greater than 1, it means that this pool has earned money outside of the deposits. And 1.06 means that 6% of the value of this pool comes from fees and is not from deposits. If the value of the virtual price was below 1, it would mean that the value of this pool is actually less than the deposit, and in fact, it has lost money. And what you want to look for in a lot of these pools is a virtual price much greater than 1, or actually for stable pools, this somewhere between 1 and 2 is good. Um, so for the stable pool, some of these numbers mean basically your 365 yield or TVL is basically taking the 24-hour fee revenue that it's made for this pool and extrapolating it out to 365 days. Your base APY is actually a better measure for this pool. It uses the virtual price to calculate this, so it's quite a bit different calculation, but it also includes the compounding. Now, the thing you should know is about this fees. All the fees are captured within this pool. They don't leave this pool, and they're all automatically compounding. So the only way to track the value or how much money you've earned is basically you would deposit. Um, I'm doing an unbalanced deposit because I don't have USDT, but I definitely recommend only doing balanced deposits to as you should only do an unbalanced deposit if you know what you're doing to prevent loss. So I'm doing an unbalanced deposit here, partly because my $1 is very small compared to the total thing, so potential loss is minimized there. But so because the fees are not broken out, the only way to see how much I would have made is to take my USDC, click withdraw, click max, and then see what I would get in the assets. If I wanted to, I could do, um, I could have it all be received in USDC. And as you can see, I deposited one, so I would have to wait a little bit before this returned my something greater than I added. But this is how you'd be able to track, if you made more money than when you deposited. And I'm going to withdraw from here. Okay, so all right, I think one of the most interesting things to take a look at is pools with farms, right? So if you're looking for good yield opportunities, pools with farms are really good because you can kind of figure out sort of what to do, or what are what are some other interesting opportunities, and how do pools make earn you yield, right? So a lot of things to consider here. Now, a lot of these pools with farms basically are all volatile, so you will have to manage your impermanent loss. Definitely recommend reading up on that. But let's look at this a good a good opportunity here. So basically, there's this Blaze USDC pool. It has a TVL of 156K, and it has volumes of 26,000. And this is saying it's giving you a 63.61% 0.61% yield over TVL for over extrapolate over a year, right? So it's earning pretty decent fees, right? But also you're earning this LM APY is farming rewards. So with this pool, now farming rewards are an extra set of rewards that a project will give to get you to deposit and provide liquidity, right? So they don't usually run for a long time. They're a limited time opportunity, right? And basically what this means is that this pool is earning you 63.61% in fees, and the project is giving you 92.07% in rewards on top of those fees. Now this number isn't exactly you can't really exactly add them because this is APY. The LM is an APY and this one is sort of kind of an APR. But in general, they're additive. So so this is probably like a good opportunity as long as you can kind of manage your impermanent loss, right? But again, you'd have to go through the same steps of being able to again, you need to be able to do, in these kind of cases, we sort of enforce doing a balanced deposit. And so I don't have Blaze, so I can't deposit. But one thing you can do is you can click over here. You can take your USDC and switch over to Blaze. Okay. Let's say I just want to swap one Blaze. Right. So this will swap. I can swap from my USDC to Blaze. Usually you can use half, and you can do it without leaving the site through Jupiter, so you're getting the best prices. And then, so here, I could then go over here, do a balanced deposit here, right? Now, once I've deposited, I am earning from this fees, but I'm not yet earning on the farm on the LM rewards. To earn from the liquidity mining rewards, we need to deposit into the farm for this thing. Now, you could go to the farms tab here and click on it, but we also have this handy shortcut, so I can click on this view farm. And then here's my LP tokens that I deposited. I got from depositing. I can now stake my LP tokens into this farm. And now that they're staked in here, you can see that I'm now earning Blaze, and it's being kind of I'm earning it in real time basically. So um, now this farm will tell you how many rewards it distributes every week, how many you have staked, the total staked, and what the sort of APY is. You could claim this here. If you had a bunch of farms you were staked into, you could click this one button and claim all of them. You can go back to the, I could unstake. So if I want to leave this farm and withdraw from this pool, I would first withdraw from this farm. Then I would visit this pool, go to withdraw, select max. Okay, select max, withdraw. And now I'm giving my LP tokens back, so I should get Blaze and USDC back. Okay. Okay, so another really important new AMM technology we've recently launched is our DLMM, which stands for Dynamic Liquidity Market Making. And it's currently in beta. Now, the really cool part about this one is that if you are looking to be more active, or you're already fairly knowledgeable about LPing, this is a great opportunity to really earn fees, and especially on sort of a lot of the more established popular token pairs like, say, Sol USDC. Now, when you're looking at this 24-hour fee over TVL, one thing to note is that this percentage is not an APR, and it's not over the course of a year. This is actually how much percentage you earn per day. So this 1.16 percentage means that your actual APR is over 400%. And so, this could be a great way for any LP to like earn some really great fees from some of their assets. Now, one of the ways it does this is that instead of our pools operate over the full range, but one of the main ways the DLM works is that you're able to earn fees, concentrate your liquidity across a small price range. So if you're looking at my current liquidity, it's only operating over 143 to 158. And that allows me to put currently this about $37 worth into this small price range, and allows me to earn some fees. Now, the really cool part, and this is super unique in Solana, is that you're able to construct your liquidity in these zero slippage bins, and you can shape them in all these different kinds of strategies. And you can see currently in this position, my balance of I have 32 USDC and 2.8 GTO, and I've earned about 0.005 GTO in fees. And you can see, like, the purple bars represent how much GTO liquidity I currently have, and the blue is all the USDC. And as trades are happening on this pool, you can kind of see this balance shift. Now, the neat thing is that, like, I can actually withdraw some liquidity if I want to. So I'm going to withdraw. Now, the other thing to note is that this fee number is completely about the total fees earned for the day over the entire TVL, right? In reality, people who are actively managing it and highly concentrating their liquidity are actually earning quite a bit more. And so, what I could do, for example, is I could take liquidity I just deposit. See, I can create different shapes, right? I can further concentrate this liquidity over a small range, meaning all the trade that's happening here, I can get as much of it as I can, right? Now, the risk is that if the price moves quite out of this range, I stop earning fees, right? And also the other thing is that you uh, the divergent loss and the impermanent loss can be quite a bit greater because of the concentration. But now you can see I have two positions, one here and one here with different strategies and shapes. You can also, I can actually also add liquidity. So you can see if I add liquidity, I can change the shape, you know, um, by just adding liquidity. And so on top of a current thing, you know, and you can see that like here, just adding this different strategy on top, you can start to blend and customize the strategies that you want for um, as an LP. Okay, so this is we do have a separate video that does a deep dive into this. I would definitely recommend checking it out. The last thing I would just briefly go over is our vault system. Our vaults are our dynamic vaults are basically utilized by our dynamic pools. So all the capital in these pools actually are stored in our dynamic vaults. And that's how our dynamic pools earn both from lending yield and trading fees. All right, hopefully that is pretty helpful for you. If you have any questions, let us know and see you in the Discord. Thank you.